Funding for Market Journal is provided by the Nebraska Soybean Board and the Nebraska Corn Board.
Growing more with less is the mantra of Nebraska's corn farmers, and they're using incredible technology to do it. Soil moisture monitors let them know when their crop needs water and how much. GPS systems eliminate overlaps in the field, saving fuel and money. New hybrids reduce the use of pesticides and increase yields. When you're talking new technology and innovation, Nebraska corn farmers are all ears. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board and the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Luke Beckman looks at corn and soybean markets. Dennis Conley describes the value of Nebraska's ethanol industry. Derrell Peel looks at cattle markets, and Berger talks about developing trigger dates and stocking rates for pastures and ranges. Luke Beckman from Central Valley Ag is our grain market analyst this week. 7 states have begun corn planting season according to the latest USDA crop progress report. Texas farmers lead the nation, having sown 46% of their crop. Overall, U.S. growers have put 2% of this year's corn in the ground, 1% behind this time in 2014, and 3 points behind the country's 5-year average. Luke joined us to look at markets Wednesday afternoon. Corn and soybean markets struggled last week, and to start this week, they turned around Tuesday. What's influencing prices?
Well, right now, a lot of it's money flow. Commodities in general have been pretty soft. U.S. dollars kind of had a return to higher levels, and it's just been a broad-based commodity kind of sell-off. Wheat, with the weather being a little bit beneficial to some of that, has been kind of a leader to the downside. So a little bit of recovery Tuesday, Wednesday, kind of a dead cat bounce, if you will. We can't go down every day. Yeah. So really nothing material outside of that. I did have some friendly numbers from the crush for soybeans on Wednesday as well.
Crush numbers released Wednesday, the best March ever. What else?
Really, they're looking at, a crush number that did come in well above expectations, 162.8 for the month of March, very good. Really, soybean meal use was kind of the story there. Huge swing from where we were in February. So not sure if we can tie that back to maybe more hogs on feed than what we thought. We kind of got indications of that back at the quarterly hogs and pigs report some time ago. So maybe some of that playing into soybean numbers.
So as Nebraska farmers start to hit the fields here, do you have a better idea of the breakdown between corn acres versus soybean acres for 2015?
You go back to the planting intentions report, corn acres flatlined from a year ago, bean acres just a shade softer. Nebraska producer seems like the rotation is fairly strict about what the producer is going to do. So really don't look for anything material in Nebraska to develop either way. Certainly think weather dictates that in the short term here. Looks like we're going to have an opportunity to plant corn. I continue to believe that Nebraska producers are good at that. So I think corn acres are going to hold in there pretty strong.
So does that soybean acre number, does that surprise you at all? The drop of 300,000 acres would be the largest in the country, or do you think that could come to fruition here if the weather holds?
The numbers where they're at, everybody was talking for much larger soybean acres nationally. Really didn't get it. So like I said, I think that if we do have good weather here in late April, early May, I really think that you see the corn acres at least stay where they're at or grow possibly, and that probably keeps the soybean number in check from where it's at today. So that could maybe be a bright spot for the beans.
So we talked about soybean meal usage. Feed demand, is that a number that you guys see that could be changed in future USDA reports, and why?
Absolutely on the corn side. I mean, you look at the quarterly stocks number and immediately everybody's talking about, well, the feed number's way too high. USDA then, simple 9 days later, goes ahead and takes feed demand down by 50 million bushels. So conversations or thoughts are that the USDA is going to step into that, and they're going to continue to lower feed demand in subsequent reports. All of a sudden, the June 30th stocks report, certainly interesting. It's a ways off, but something for producers to be, mindful of and thinking about that, if corn's feeling like that feed number is going to continue to work lower, June 30th could kind of be the revelation that is in fact the case.
Describe how basis has moved in both corn and soybeans.
It's very firm right now. The board has been falling. It's been very flat. Producers not really engaged in selling anything, and who can blame him? This is a time of year where the producer is going to turn his attention to the field. So I really anticipate basis to remain firm. I think if we get some type of rally in corn, soybeans, that producer's probably selling, late May type periods, June shipment when he can actually get it moved. So basis values for the spot in the short term probably stay firm, just because of the time of the year.
If they get that rally for, let's say, old crop corn, where might you pull the trigger at?
I think on the board you have to take a look at May futures, right around 390. You've got major support at 367. I think we just kind of bounce around in between there. Again, that 390 is just kind of the upper end of that range. So corn's been confined there for 3 months. I think it's a number you've got to sell if we get up there, and then take that equivalent to the July futures because we'll be rolling soon.
Into the 2015 new crop, where would corn and soybeans be attractive at?
Upper levels of December corn at 420. That's kind of been that range that we've seen. If producers don't have anything started, that's definitely a level I think we need to look at getting something on the books. Soybeans, $9.75, $9 cash out of the field if you have to sell it. Those types of numbers we need to be engaging. Probably thinking that beans need to happen before corn if you had to make that choice.
Looking further ahead into 2016, where would your targets be there?
Same thing on corn. If we get 430, 435 up to 450, 430, 35 is kind of in the top on the corn. Soybeans, if you're just under $10 on the board of trade, probably a good spot for some early sales.
Next week, Jeff Peterson from Heartland Farm Partners will join us to analyze corn and soybean markets. A study released Tuesday from UNL's Department of Agricultural Economics says the value of Nebraska's ethanol industry over the last 3 years has averaged nearly $5 billion a year. This state is the second biggest ethanol producer in the nation behind Iowa and supports 1,300 full-time jobs. The analysis shows while profit margins have varied for Nebraska's ethanol sector, it brings new money into the state by exporting a large percentage of its production. This week we talked about the findings with Dennis Conley, one of the report's authors and a UNL professor of ag economics. We started by asking Dennis to describe the growth in Nebraska's ethanol industry.
Jeff, over the last 20 years, it's gone from really a very small industry up through in about 2005 is when it really took off. And now it's roughly 2 billion gallons of ethanol a year, which is 10 times bigger than it was 20 years ago.
Where does that ethanol go?
The ethanol goes into domestic consumption, consumption within the state of Nebraska. But what we found surprising was that only about 77 million gallons are consumed in the state, or roughly 4%. The other 96% goes to other states and probably into the export market.
So Nebraska is contributing not only domestically, but also internationally?
We probably contribute internationally because we do export some ethanol internationally, and we're one of the major producers, and so we're participating in that market. And I might say the other thing is, what that tells us is that Nebraska is one of the largest exporters of bioenergy to other states in the U.S. and the world.
The value of Nebraska's ethanol sector, the ethanol and the DDGs combined, or distillers grain combined, what was that? Compare that for me. What would that rank up against for the ag sector here in this state?
If we were to go out and drive across the state of Nebraska like many of us have done, and we see cornfield after cornfield after cornfield, and you think about what is the value of all of that corn in those fields? The value of ethanol production is 2/3 of the value of all the corn that we produce in the state of Nebraska.
What about the cattle, for instance?
In the cattle, it's a little bit less. We look at cattle sales, so we're running somewhere around 40 to 50% of the value of all of the cattle sales in Nebraska would be equivalent to the ethanol value, ethanol and distillers grains sales.
For Nebraska's 20-plus ethanol plants, how profitable has ethanol been for them?
Yeah, there's 24 plants in the state, and when we look at the net returns for both the ethanol and the distillers grains combined, we find that there are some years where they make $1 or $1.50 a gallon, and there's some years when they make nothing. For example, 2012, and I think intuitively we understand that because of the drought conditions, the higher price of corn, et cetera, et cetera. And in other years they make very good money when corn is low priced and fuel prices are high. So it's a commodity type business. There's years of famine and there's years of feast.
You mentioned the usability of ethanol in this state and then what the state also exports out. What role do distillers' grains play there?
Interestingly enough, distillers' grains, if we take the distillers' grains that are produced in the state of Nebraska and we were to feed it at the maximum to all of the livestock, 100% adoption and 100% inclusion in the diet, we would still have something on the order of about 55 or 60% of our distillers' grains production would go to other states or into the export market.
What kind of money is that to come back into the state then?
That money comes back into the state both for the ethanol and the distillers' grains, and the effect is somewhere in the order of $4 to $5 billion a year.
So for the ethanol industry in Nebraska, tell me what the importance is as it relates to other ag sectors in this state.
We look at what we call the golden triangle. And the golden triangle is corn, soybeans, ethanol as the sides of the triangle, serving the cattle industry. And it gives us a comparative advantage because we have this surplus in distillers' grains, we have this surplus in corn, and so we're in a very good economic position compared to, say, like a state like Texas, where the cattle and feed there is about the same numbers as we have here, but they don't have the corn and they don't have the distillers' grains for feeding. So we're in a much better economic position.
The report also says there are 4 emerging trends to watch related to Nebraska's ethanol industry, including the recovery of carbon dioxide and the export markets for ethanol and DDGs. We'll link to the study on the Market Journal website. The April Nebraska farmer says gender-sorted or sexed semen has been used in the dairy industry to produce replacement heifers at a reasonable cost for some time. This month's issue says there are applications where sexed semen might pay off in the beef industry, but there are also challenges to overcome, including lower conception rates and higher costs compared to conventional semen used in artificial insemination. You can read more about these applications and the potential for sexed semen in the beef industry in the April Nebraska Farmer. We also have a look at cattle markets this week with Oklahoma State Extension livestock marketing specialist Derrell Peel. As we told you in our previous episode, U.S. beef exports for the month of February were down nearly 3% from February 2014. But the biggest buyer, Japan, actually increased its shipments more than 9%. Cattle prices ran higher to end March, but have now settled back a bit. We started our conversation there when we talked with Derrell Wednesday morning.
Well, I think we're kind of in a typical seasonal pattern here right now. This year, especially compared to last year, we're going to see a little more seasonal tendency. So especially the fed cattle market, this is about the spring peak of the market. And feeder cattle have rallied a little bit. We've had fairly good grass demand, grazing demand for the lightweight cattle. And so, again, both of those markets are probably approaching some sort of spring peak here.
So the elements, are they there to take it higher or no?
Probably not, again, on a seasonal basis. The heavier feeder cattle typically do go up into the summer period, and that may happen. Feedlots have had pretty lousy margins, so they're not really interested in higher feeder cattle prices, but that may be the best place where we have a chance of it. I would expect to see the fed cattle prices begin to weaken seasonally here over the next, certainly over the next 2 months and really in the coming weeks.
How concerned are you with the U.S. beef export market?
Well, we've had some real challenges there. I think, there's 2 ways to look at it, I guess. On the one hand, it's remained remarkably strong given that we're in, extremely high domestic prices here in the U.S. and limited supplies. But certainly in the last 6 months or so, the strong dollar, the increase in the dollar relative to other currencies has made it an even more of a challenge for beef exports. And so, and that will continue to be a headwind for us. So we're going to see less exports this year than last year. But on the other hand, it's holding up remarkably well given all of these conditions.
The demand that left Derrell with the West Coast port closures, has that returned?
I think we've got most of those problems cleared up now in a logistical sense. Beef seems to be flowing again, and more importantly, knowing that situation is corrected, we're probably getting back on track with the orders and the interest in buying, knowing that we can follow through and actually make those shipments now.
How much of a boost can we expect for domestic demand with grilling season in sight?
Well, again, it's seasonal demand. I think I think we'll see that impact in there. Now, how does it translate into prices? Again, we've had pretty strong box beef prices on the combination of tight supplies and limited slaughter, as well as now moving into this summer demand season. But all of that is happening in the face of increased pork and poultry supplies, and so that continues to be a challenge for the beef side.
The USDA has announced that U.S. producers are now able to export fed cattle to Mexico. How big of a deal is this?
You know, in the grand scheme of things, it's probably not a major market factor. There's a couple of areas where, fed cattle are produced close to the border, and there's Mexican plants close to the border on the other side that might benefit from the ability to bring some cattle in and supplement their volumes. It's pretty limited. I think it's most likely, if it is going to have an impact, it will be in that Southern California to Baja California, Mexico region. There may be an opportunity to move a limited number of cattle, possibly out of South Texas as well. But in the grand scheme of things, this is really a matter of a few hundred to a few thousand head. Won't have any impact nationally on the markets, but it certainly may be important to some specific producers on both sides of the border.
How are producers in Texas and Oklahoma situated going into spring with moisture?
I tell you, we're really excited. This past week in Oklahoma, we had widespread rains, probably the best general coverage we've had in a long time. It's extremely timely, not only for our wheat crop as it finishes out this spring, but from a pasture and forage standpoint. And we're getting some rain in some of those areas that have been in continuous drought with no relief really for about 4 years. So we may be chipping away at it. Obviously, we've got a long ways to go. It doesn't solve our problems, but it may well be the first step, and it's certainly very timely.
I want to ask you one final question here, Derrell. For producers in Oklahoma and Texas, has the expansion begun? Has it halted? Where is it at right now?
You know, the expansion jumped off to a pretty big start in Texas and Oklahoma in particular last year. In fact, Oklahoma has expanded the last 2 years. So we've got a good start. There was some question, at least just a few weeks ago, about whether we could sustain that expansion. The rains that we're getting now gives us more encouragement that we can continue that process. The replacement heifers were there in the January inventory, so I think all the pieces are in place. We're still keeping an eye on Mother Nature here in terms of what we can do, but certainly I think we're ready, and we'll try to do that if at all possible.
Friday, after this taping, the USDA will release data on the price of meat during the month of March. The average price for all fresh retail beef has increased for the last 3 consecutive months. The month of March was one of the 10 warmest on record for Nebraska, while also being the second driest since 1895. In the Panhandle, Nebraska Extension educator Berger says the pattern of above normal temperatures with below normal precipitation is concerning. This comes as many farmers and ranchers in the state are preparing to turn cattle out to graze pastures and ranges. Aaron joined us from Scottsbluff on Monday and said producers may want to be thinking about trigger dates and stocking rates because output on those lands can vary from year to year.
Yeah, we can see tremendous variation in forage production based on precip, based on the health of that range the year before, moisture that came the year before, but really critical for precipitation, or really critical for grass growth, is precipitation during those rapid growth windows. For cool season dominated, it's going to be April, May, June. If you're in the sandhills and you're more warm season dominated, really May, June, July are critical. You know, we can see 5 to 7 times difference in terms of forage production based on the year. So maybe on average we're around 12 to 1,500 pounds, but we can drop that all the way down to maybe 400 to 500 pounds, all the way up to 2,500 pounds, depending on the precip you get and the timing it comes in, and also the health of the rangeland with that.
Tell me how a trigger date can help a producer in their grazing plan.
Yeah, so I think it's important to think about trigger dates and having some dates in mind. We're going to make some decisions from a stocking rate standpoint, either to reduce stocking based on the precip that's available, or I should say precip that's happened and soil moisture available. And so I think for cool season dominated rangeland, April's kind of the first one, April 1st, then late April to early May we take a second time, really thinking about the moisture available, looking at how much we've had. And then on a cool season standpoint, somewhere around June 1st is another one. And so if we've had really dry conditions, we don't have much soil moisture in the profile, we need to be thinking about how we're going to reduce our stocking rates, things like delaying turnout, maybe dry lotting some cattle, things like that, to just plan for reduced forage production. If we're thinking about warm season, we have a little later in terms of trigger dates, probably May 1st, June 1st, July 1st would be kind of 3 trigger dates. Again, looking at moisture that's in the profile, looking at the precip we've already had. Another tool available to us is kind of some long-range forecasts, and the Drought Monitor has a nice 30 to 45-day forecast that can give us some indication of where we think things are going. Currently, the pattern for the western half to third of the state has been kind of concerning from moisture we've had in March and early April. We've had a little bit, but not enough. And so also the snowpacks are down, and the Drought Monitor shows an increasing area of drought in those areas.
What does that mean, Aaron? I mean, we're in mid-April. You had mentioned, this time you'd know something or at least get a hint of something. Does that mean that producers should start planning differently?
I think at this point as a producer, I think I'd be looking at the forage I have on hand. Many people had a good year last year, but also planning probably for, especially on cool season dominated, that we're going to have less grass growth. Already things like threadleaf sedge and needle and thread, some of those are already starting to get kicked off, and we've just not had the moisture we need to really get those going. What's also concerning is also just the long-range forecast is we're not looking at a wet pattern, and so already beginning to plan on some reduction is important.
How do you know the appropriate stocking rate reduction to make on your operation?
Yeah, so as we think about appropriate reduction in stocking rate, I think first we want to look at what forage is out there currently that maybe we had in terms of residual forage from last year. And then I think we're thinking about the precip that's in the soil profile. Going out, digging a post hole, seeing what you have for moisture there is important. If we're looking at 20 to 30, 40% less moisture, then I think we want to be thinking about maybe a 10 to 15% reduction in stocking rate at this point. And you also want to be thinking about the health of your rangeland, and that's just going to really vary with what people have available. And so it's really going to depend a little bit on case by case on what your situation is.
Finally, Aaron, are there different lease considerations to take into account on a year like this when you are maybe a little bit more concerned about the moisture situation?
Yeah, I think those who own land and are leasing it to livestock owners need to have a conversation around how are we going to handle things if there's a drought situation. Currently, there's a government program, the Livestock Forage Disaster Program, that will compensate livestock owners in the case of a drought for the grazing loss that occurs. So the challenge becomes is there's a lot of situations in Nebraska and other states where pasture is rented on a per head per day basis. So the landowner rents it to the person who brings the livestock on a so much per head per day basis. In that situation, unless the livestock owner can constitute risk or show risk in the pasture, as the law reads or as the program reads, they cannot get paid because if they're just paying on a per head per day basis. So I'm encouraging landowners and livestock owners to look at moving towards a paying on a per acre basis, and then still having a drought clause in place that if a drought occurs, they somehow figure out how to mitigate that or work through that on a payment basis. But that then provides a situation where the livestock owner has the opportunity to collect on this Livestock Forage Disaster Program payment.
Aaron also encourages producers to make sure their leases meet the requirements of the Livestock Forage Disaster Program. He advises farmers and ranchers to visit with their local FSA office to make sure what they have in place will allow them to collect on the program if necessary. Now, with a look at this week's chances of precipitation, here's Nebraska Extension State Climatologist Al Dutcher.
Well, folks, here again for the weekly forecast. Last week we talked about the potential for a system moving out of the western United States to move through the central southern plains and then eventually migrate itself into the central and eastern corn belt and cut off from the upper air flow. Well, the models were only off by a little over 1,000 miles as that system actually cut off over the central Rockies. Very beneficial for Nebraska because instead of us being on the backside of the low and dealing with northwest flow and scattered shower activity, we actually were able to fetch that moisture from the Gulf up into our region in a long-lived fetch that has been as the system slowly moves eastward. And therefore we were able to kick off daily thunderstorm activity. And in some locations of the state, we've already received with this system a month's worth of precipitation with more potentially to come this weekend. So very welcome moisture, hit some of the areas of the state worst hit by the dryness issues. Not enough to eliminate the drought, but certainly will get our attention in terms of the moisture that it did provide and the potential as we go forward in time for us to, at least if we get another system or two like this, we can pretty much eliminate some of these drought situations that we've been dealing with now for the better part of the last 5 to 8 months. So let's take a look at the upper air models and see what we have in store. Here's that upper air low, slowly going to migrate its way across the southern plains. It'll start to weaken, and then with the northern stream coming across on Sunday, These two will merge as they move to the east of us, but more importantly, we will still be drawing that moisture up from the Gulf of Mexico. There is some concern that there might be a little bit of a dry slot working into portions of southern Nebraska, and that would take the precipitation heavier event up into northern Nebraska. But it does look like everybody will share in the wealth, and by the time we get into tomorrow, that system starts to open up, and merging with this shortwave coming across the northern plains will drive a cold front through. So once again, we'll see scattered thunderstorm activity across the eastern one-third of the state, with the best potential for severe weather across southeast and northeast Kansas. By the time we get to Monday, this system clears to the northeast of us, but it will migrate with this upper low, bringing cool conditions across most of the northern plains, and some of that will entrain itself into northern and eastern Nebraska. So wouldn't be surprised we'll see frost conditions develop across the state both Monday morning and Tuesday morning. And by Tuesday, you'll see that system is basically parked in the same place. We might see about a 5-degree warm up in temperature, but we're still going to be below normal. But by the time we get into Wednesday, the system starts to flatten out. We start to see some moisture coming into the southwest across the southern plains. So we may see some precipitation breaking out across Kansas, and some of this might actually make it into southern Nebraska. On Thursday, this system tries to deepen once again, shoots another piece of energy around it, and we'll be looking at some isolated showers across northeast and east central Nebraska. And by the time we get into Friday, this system starts to come out of the southwest, and this is our potential for the final week of the month, driving precipitation across the central plains. If we look at the temperature forecast, warmest conditions this weekend, cooling down during the early part of the week, and then a slow warm up toward the end of the week with just isolated shower activity. 8 to 14-day forecast, cooler than normal from next Thursday to the following Tuesday. And in terms of precipitation, heavy precipitation to the south of us. I would like to say that I will be on vacation through May 20th, and so Stoney will be substituting for me. I'll see you back here on May 23rd.
Thanks, Al. Today's interviews can be found on the Market Journal website and through the Market Journal mobile app. They include information on corn and soybean markets, ethanol's impact on Nebraska, cattle markets, and managing drought risk for ranges and pastures. As always, you can keep up with Market Journal during the week on Instagram, Twitter, and Facebook. Next week, Jeff Peterson will analyze corn and soybean markets, and Tina Barrett from Nebraska Farm Business Inc. will give us a preliminary look at 2014 farm incomes. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board and the Nebraska Soybean Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Funding for Market Journal is provided by the Nebraska Corn Board and the Nebraska Soybean Board.
America's export of soybeans helps the U.S. maintain a positive agricultural trade balance. Nebraska contributes half of its soybeans for export. The protein and oil content in soybeans enhance the growing demand for higher protein diets. The Nebraska Soybean Board promotes research to develop new soybean varieties with higher protein and oil content for major agricultural markets. The Nebraska Soybean Checkoff, growing opportunity from the ground up.